there's a lot of mistakes that we have actually went through that we talk about, and it seems as if some people are like, alright guys, I'm not sure if what you're talking about is correct. Yeah. And then until they are in a situation, and then that's when they come back and like, oh gents, you know what, I wasn't the exact situation that you guys were telling me about, but I had to go. The one thing that I've noticed is that some people have to go through that in order for them to learn. But today we are talking to the guys that actually want to learn and not make or do the same mistakes that we have done. So today we're going to be talking about the top 4 mistakes that property investors should not do.
Yeah, man, as we did mention there, with that, it's school fees that you guys don't need to pay. I mean, we have already paid the school fees. The paving has already been done. All you guys need to do is just take notes and make sure that you do not repeat the same mistakes that we made. And the thing is about this content, Lewis, that it's coming from a place, and we always say this, it's coming from a harsh place, because this is literally where we lost money, right?
Yeah.
Jumping on to number 1, you don't want to take the lease agreement for granted. To a lot of beginner property investors, a lease agreement is just a page with a whole lot of law jargon.
Yeah.
And I'm not interested in it, so therefore I can just simply download it and give it to my tenants. Whereas that is one of the biggest mistakes that you can make as a landlord. And I mean, I've seen this whereby with one of the people in our circle, I mean, imagine having 10 tenants. And with the 10 tenants, because they came from different agents, you find out that there's different lease agreements.
Yeah.
Now, when you're looking at it from that perspective, you find out that one is 2 pages, the other one is 4 pages, the other one is 8 pages, the other one is 12 pages. As I'll tell you today that our lease agreement is about 18 pages. I think it's between 18 and 19 pages. So therefore, if I've got a 2-page lease agreement, I really need to ask myself, what does that guy have in his lease agreement that has 16 pages or 17 pages? So therefore, I'd like to say that, especially as beginners, do not take for granted the lease agreement. Because remember again, that document, if anything goes wrong, right? A lease agreement is a legal document that is going to protect us one day if something does go south. Now, what happens if I'm at court, especially as a beginner property investor, with a 2-pager? I might find out that there were certain things that were missed in that contract. So I'd really urge landlords that, yes, when we start, I remember even with us, Leo, the easiest thing is to go to Google, or there's even Meta right now, to ask Meta, or what's that other one, ChatGPT. There's someone can literally say, Chat, please print out a lease agreement for me. I can give you that content. But now you're forgetting something, that with lease agreements that are drafted by lawyers, especially that are updated to the current law, it speaks to what is happening right now in the property space. So therefore, I would urge landlords, especially as beginner landlords, to move away from downloading property investing lease agreements to rather consulting and getting a proper one.
Another mistake now that I see a lot of property investors doing, especially beginner property investors, is going on a month-to-month lease. Right? And now with the month-to-month lease, I mean, there's big companies, right? There's big companies that actually allow month-to-month leases. Now, if you're looking at a company that has a portfolio of around 1,000 apartments, right? If you're looking at those kind of people and you're looking at someone that's actually starting their journey right now, those people are not viewed the same from a bank perspective. A bank might see these guys, about 1,000 units, as these guys actually know what they're doing. They've been in the game for a long time and they have too much to lose. Now, if you're looking at someone who's buying their property for the first time and they're saying that they want a month to month, the bank, in the bank's mind, they are saying that the risk is too high, because if this person decides to leave this property right now, how is this person going to be returning my money? Now, I remember there was someone that was like, guys, the banks are not willing to finance me on my property. Now, the main reason was because that person was on a month to month. Their tenant was on a month to month. Now, once the tenant actually left and they got a new tenant and put them on an annual, now the bank was more willing to actually give them that financing.
Yeah.
So sometimes we need to understand that the decisions that we are making in our property investing portfolio might affect us long term.
Yeah.
Yes, you might get a tenant faster, but now the question would then be that looking at your journey, is it sustainable for long term?
So like what you're saying then is that it does happen. I mean, we were also in the situation whereby a tenant was like, gents, I want a month to month.
Yeah.
Now we need to look at it from a perspective of, yes, if I'm agreeing on month to month, the tenant is there. But now accessing finances in the future, this could become a risk. Because now once I'm applying under that business, let's say that this money is coming to, let's say that the rental money is coming to my business account, right? And then one day I decide after 3 months that I would like to apply for the next property. And then now the bank requires then those lease agreements. Now it's going to be an issue once I'm going back to that bank and telling them that it's a month to month. So you'd rather be in a situation whereby I prefer 12. Because again, you're looking at it from a perspective whereby, yes, I could have retained that person, but then the real question is, why are they insisting on a month to month? Are they waiting on something to come through, and then once they got that thing, they're going to throw you just like that?
Which might be true, bro. It might be true, because there's that lady that wanted a month to month, but they knew that they were on contract, right? Their contract was a 4 months contract at work. So now, after the 4 months, they were going to be they were going to be sent to another province. Now, if you are in that situation and I'm taking it as a landlord, number one, I need to understand that if I did have an estate agent, I'm going to be paying the estate agent double. Yeah. Because now, for that 4 months, I'm going to be having that tenant, but after that 4 months, I'm going to be looking at finding a new tenant, which means that I need to pay the estate agent again. So these are the things that we really need to consider, that if I am putting someone on a month to month, what does this mean long term? Yes, I got them right now. I got this person right now. But now, long term, how is that going to be affecting me?
So now on to number 2.
Development. For the guys that are into development, right, this is directed to you guys. Or someone that wants to buy a development, or someone that is looking at buying a multi-unit, right, or in an HMO. They say it's a HMO. An HMO, right? So now, what the number one problem is with a lot of people that go into development, right, is that people are more inclined to say that the more units that I have, the better it will be for me as the landlord. Now, say for instance, if in your piece of land, you are able to put in, the contractor comes to you and say that he's able to put in 12 units. Sure. Right? But now you are like, no, but from this 12 units, we can actually get 24 units. Right? And now remember, the contractor won't say that, I'm not going to put in 24 units. Because remember, for them, it's business. They can only advise this far. Because now, I remember I was having the conversation with someone, with this other contractor, and they were saying that clients that have money are the most difficult people to talk to, or the most difficult people to reason with, right? Yeah. Because now I'm saying that, bro, you can't build 24 units on this piece of land because it's going to be too squashed. Now,
I'll find someone who'll build it.
Exactly. Once you start saying that you can't build this, they will find someone else to build it. But now, at the end of the day, you would have actually lost that client as the contractor. So contractors will tend to say that, no, it's fine. I gave them my opinion. But now what they do with that, it's totally up to them. So what then happens is that some people will then see that I want to build 24 units. Now, here's where the problem is. You build your 24 units, but now once you look at the practicality of it, right? Number one, you put in your shower, you put in your toilet and the basin, right? But now looking at the kitchen is really small, or the kitchenette is really small. Now, the worst part becomes where they have to put in their bed. Okay. Where they have to put in their bed, they can only fit in a single bedroom, a single bed. Now, the question would then be that, was it really worth it for you to actually decrease the size of the property? Now, for that bedroom, you can only charge 2,500. 2,500. Now, if it was slightly bigger, right, where someone could fit in a queen size and also an L shape, you could have actually charged 4,000 or 3,500.
So when you're saying L shape, you're talking about the couch?
Yeah, the couch.
Yeah.
So now, if that's the situation and you could have actually charged 4,000 for that kind of property, then the question would then be that which one would be better? Is it better for me to have more properties on that land, or is it better for me to have less units, but now I'm charging more than having more, but I can only charge less? And even when I'm charging that less, those people that are coming in are specific people that do not want to have a double size.
For sure.
Personally, I can't sleep on a single bed. I don't know about you.
No, but we can. But you know, Lebu, you mentioned something very important, especially with the space one, right? Is that a lot of us, we're looking at it from a perspective whereby the more people I'm having is the more money that I'll be making.
Yeah.
Whereas I'm not
because you're collecting from more.
Because I'm collecting from more.
Yeah.
Right? But then I'm not necessarily paying attention to what if I could get just a bit less, but then still charge more.
Yeah.
Do you know what I think? The biggest problem is, especially with beginner property investors, when it comes to this issue.
Yeah.
And I'm going to be honest, I come from there.
Okay.
You know, sometimes when you are afraid of putting a price to something, then now you're in a situation whereby you're a landlord, but you don't want to charge market, or you don't want to charge a bit high because you're afraid that it might be empty or people might not come through. Whereas the more time I've spent in the game, I've then established that there's a market for everyone. But now I'm not saying that we should now go extravagant. Guys, I don't want you to do this and then you're going to come back to me and say that you said this. I'm not saying that we should all go extravagant now, trying to find that top tier client, and now you're not finding them.
Yes, bro, you just touched on something, right? Target market. And this is something that a lot of people don't take into consideration, especially when you're looking at property investing.
Yeah.
Whenever you're looking at your target market, you need to understand what your target market is willing to pay for and what they are not willing to pay for.
This is before you even develop the property.
This is before you even develop, right?
Sure.
Now, if you're going for the target market that want to pay bare minimum, then you need to understand that those guys are not willing to pay prepaid electricity. They're not willing to pay for water. Now, if I'm saying that that's my situation, and now I have actually built my property according to that target market, but now I still want to charge them for that, then my property is going to be staying vacant. Now, you need to choose a struggle. We need to say that, you know what, I'm going for the guys that are willing to pay. And if I'm going for the guys that are willing to pay, I need to make sure that I am going to be paying when I develop this property, meaning that my property sizes are actually going to be bigger. It's going to be nicely tiled. It's going to have good quality stoves. It's going to have good quality showers, and everything is going to be good quality, right? But now when I do charge, I know that I can charge them for the rent. I can also charge them for water and electricity.
Yeah.
Right? And sometimes they do charge sewer.
Yeah.
But now the problem is that if you are now saying that I'm doing bare minimum, but now I also want to charge the highest prices, then you're going to be finding yourself in a problem there.
Yeah, like the last one, right? I'm really enjoying this one, guys, because we're looking at it from different perspectives. The last one with this one, we had a meeting, it was yesterday, with one of our clients, whereby we were looking at this in terms of, with him it's a student accommodation, right? So with him, it's a student accommodation. Now, we didn't go for the NFSAs. It's more of private.
Yeah.
Now, the question was, when we're sitting around the table, was, but guys, do we need 20 students in this house? Or, because the house is really proper, right? So how we went around marketing it, we're looking for your students that are doing their masters and their PhD. So you're looking of people rather they're young adults that have already either tapped into the working field or they are just about to, right? So when we're looking at it from that perspective, we then said that they don't mind, because we do have certain students there, they don't mind paying 5,000, right, for a room. But now you really need to make sure that it's top notch, right?
Yeah.
So then the question was, guys, do we really need to do sharing? Because when you're looking at it from a perspective of sharing and it's private, it was that situation whereby your sharing could then be 2.4 or 3,000. But now what if we don't do sharing. So yes, when you're looking at it from a sharing perspective, right? Let's take a 2.5, and then you're getting two students. That's 5,000. But now, what if we eliminate the sharing and then we charge premium on it? In that way, you have less stress as the landlord in terms of the number of people. But then looking also even at the number in terms of how much you're collecting, it could still be competitive. So again, it's more of you really understanding the market and how can you then position yourself for this.
Now, I have a question for you, right?
Sure.
And I want you to answer and then also give me a reason why.
Yeah.
You have two situations right now. It's either you're going to have two students that are living in, okay, it's a multi-let,
Sure.
right? But now in this one particular bedroom, it was the master bedroom.
Yeah.
You have two options, right? It's either you're going to be putting in two students that will be paying 2,600 each.
Yeah.
Which means that together they are paying 5,200. Ne?
Yeah.
Or get one person that's going to be paying you 5,000 for that room.
I mean, that's exactly the meeting that we had. I would go for one, bro. As much as, yes, it's $200 less. But then now looking at it from a maintenance perspective,
Yeah.
the more people you're having, people also need to understand the more I'm having, it's probably going to cost more. Because remember, that toilet now, it's not going to be flushed, let's say minimum of 5 times a day. It's going to be flushed now, the more people that you're having. So at the end of the day, for me, I'd really look at it in terms of 200 via maintenance. Is it really worth it? And remember again, when it comes to sharing, I've seen a lot of fights, bro.
Yeah.
Especially for the fact that they don't know each other. So the stress again, two individuals in one room, it's bound to happen.
So you'd rather have just one person in that unit than having two people sharing?
For me, I'd rather have one and charge premium, bro. I don't know, guys. What do you guys think, guys? Two or one? Let's hear from you guys. Would you rather have that two in a situation whereby the margins are not so much? Lewu did mention that 2.6, right?
Yeah.
So it's 2.6 for each, whereby they're both sharing. So that gives you about 5.2. Or would you rather just have the one person?
Yeah.
Guys, let's hear from you. Would you rather have two or one?
Yeah. What would I do?
But yeah, man. But I still get why
if it's a
someone
multi-let, right?
Yeah.
If it's a multi-let and I'm not only collecting money from that one person, right?
Yeah.
Let's say I'm saying that two, if it's students, right? Let's say also saying that definitely go for one person to reduce the stress that will come as a landlord.
Yeah, guys, get stressed. I didn't say it.
So
I've from stressed. I didn't say no, bro. Let me give you a chance, bro.
On my side, man, if it's a multi-let,
Yeah.
and I have other people living in that building,
Yeah.
I'd rather have one person in that room,
Okay.
right? But now, if it's a house, ne, and I can rent out two rooms, right, that are separate,
Two beds.
2 bedrooms that are separate,
Sure.
right? If that's the case, then I'd rather go for that sharing. But now, if I'm only collecting from one person, for me, guys, the thing about me, right, is that if I'm going to be taking out a bond on a property, right, we need to make or do calculated risk, to make a calculated risk, right? And the reason why I'm saying calculated risk is that if we are going to be putting all our eggs in one basket, I mean, even in property investing, there's such a term, putting all your eggs in one basket. If I'm saying that I am trusting this one person to pay my bond on a monthly basis, I'm putting myself, this is for me, right? What might work for you might be different, but for me as a property investor, I don't feel comfortable with trusting only one person to pay my bond and also give me profits at the end of the day. The reason why I'm saying this is that things happen to people. It might happen that that person loses their job. Then what? That means that I won't be able to make payments for that bond on that month, or the money has to come out from my pocket. But now, at least if I'm having 5 people and I understand that one person is going to be leaving, I still have 4 other people that will be renting out. That's why we always say that as property investors, I know that we all are encouraged that, no, guys, start with one house, rent out to one person, and then get your money on a monthly basis. But now my question is that what is the risk on the other side of the coin. And now some people might say that, guys, but I've never managed anybody's, I've never managed a property. I've never bought a property. This is my first time. There are people that have experience with regards to managing properties that know how to deal with tenants. So on my side, man, I'm just saying that the more, the merrier. But now in this case that we are talking about, that we have one unit and then we are saying that two people can go in that unit. I'm not an advocate of that one.
Okay, and then number 3, right, is then getting the wrong contractor or caretaker. Now, the thing about the wrong contractor, you guys have heard us speak about contractors, and we always get reminded, why do you need a contractor? Like even today, there was an incident again, whereby someone is invoicing you. Someone invoiced us, and then we asked for the receipt. So this person is literally telling you that the material for, let's just say that it was, I remember it was about 1,600, right? Because we had a plumbing issue. So this person came back and said that the material they're charging us 1.6.
Or Tabs is asking wrong caretaker for what? For managing your property.
Yeah.
Sure.
So it's managing or contractor for
fixing your property.
Development. So as I've been in a situation whereby even at home, you find out that there was a whole development, but now we got screwed over so many times, man.
Oh, bro.
I don't know. Like, is it a thing whereby for us it's an advantage? I think at home it's because they are relying on other people, right?
Yeah.
So for us, we are more on the ball in a sense whereby I want to go and buy the material. Guys, here's my conversation with a contractor, right? Is that I prefer buying the material and then charge me per square meter, so that I can understand exactly how did you get to that. So of course it will differ from one job to another. I mean, plumbing on a per square meter. So when it comes to the tiling, I would like to negotiate even on per square meter. So if I am negotiating, I don't want to negotiate, say that, hi, at least like $100. What is $100? So if I felt as if this guy was charging, let's say $300 per square meter, and then I know that with my house it's about 400 square meters, then you then do the calculations and then see that is this within budget or not. So number one, this is what I prefer, as I did mention earlier, is that I prefer buying the material.
Yeah.
Because even with today's situation, as I did mention, the gent had already invoiced, right? He said labor and material. And then he was like, no, but for labor, because I know you, I just charged you $300. I'm like, no, cool, bro. Can you please send me the receipt from builders?
Or the invoice.
An invoice from builders. Now there's stories. I mean, how can you give me a story for something that you bought vandaag? As we need to be really careful out there. I'm sorry to the contractors that use this strategy for a living, but let's be honest, guys. Let's operate on honesty. If you are charging me premium, or if you are charging me this amount, be bold about it. I respect that person more. If someone is going to come to me straight up and say that I'm charging you 10,000 to paint, I respect that person way more than someone who come to me at an angle whereby, no, I'll buy everything. Remember even with that guy that was painting, bro? Guys, I was shocked when this guy said this, right? He said that they manufacture their paint. And I was like, okay, cool, man. I didn't want to complain hereby. He says he manufactures it and then he'll paint, right? And then we went there just as he was about to go to finish up. And he said that, gents, I'm done. And we were like, no, thanks for the job. Let's send you your money. We sent the money. And then he left with the paint, because I remember there was a 20 liter. So I'm sure there was like 5 liters.
Yeah, that unit doesn't finish a 20 liter.
Oh, you remember that story, no, bro?
I remember it.
So I'm sure there was like 5 liter left there. So the guy was like, no, the one that's left. I'm like, what do you mean you leaving with this paint? He's like, no, when we paint whatever that's left, I'm leaving with it. And then I was like,
but why did you sell me this paint then?
Because on the invoice it says 20 liters. That's what you paid for.
Yeah.
So imagine now if you're not there. That's the harsh part about this industry, is that if you're not there, this is only on paint. Imagine a whole project. This is only on paint.
Tola, you bought like 40 kgs cement. and they only used 39 or 35 of that 40. Now they leave with the remaining 5 kilograms of cement.
They're going to sell that cement for 20 rand.
Whereas you could have actually got that cement and then took it back to builders to get something else. So man, these things are some things that we need to really consider as beginner property investors. And I know some people will say that, no, but my contractor can get a discount. I personally, I feel like that's something that you need to do once you have had or experience with that particular.
Saying that I buy the material.
If you have, is it still recording?
Let me go again.
Sure. If you have experience with that particular contractor, I would say then you can actually by all means go with them, right? But now personally, with the work that we have done, we have seen that, as guys, I don't know, that some people, right, they would rather think about the short term right now than the long term. So short term for them is that, okay, I bought, this person trusts me. And how absurd is this? This person trusts me, ne? And I agree with that. This person trusts me, and now with them trusting me, they are willing to say that, no, you can give me your own quotation. Tell me how much everything is going to be costing, right? And then instead of one brick being 1 rand 50, their brick is now 3 rand per brick, right? Then they will tell you that, no, because I had to go to the shop, I needed to put in that markup, 1 rand 50. Now, the question would then be that, is it really worth it for me to then say that this person must actually go? Why can't I actually do it myself? And then they only charge me for the labor. I think that's something that really stands out for me, especially when going into property investing and also looking at buying or renovating a property. Let us buy the material and then you only charge me for the labor.
Guys, I see that. I feel as if there's a lot of people that have stories to share, especially with this one, right? So what we're going to do is that we're just going to do the last one, which is choosing the wrong finance. And then after that, we're going to open the live so that anybody can share.
So the last one is choosing the wrong finance mode. This one tends to be overlooked, right, by a lot of people. And sometimes we think, I think this is one of the videos that we had on YouTube, right?
Sure.
Where we had the accountant, and the accountant was saying that not all money is good money, right? And by not all money is good money, we are basically saying that if someone is willing to say that, no, guys, I'm going to be giving you finances so that you can actually buy a property or be involved in the property investing industry, right? Then we are saying that bring that money over here. Now, someone tells you that, okay, now you are going into a flip right now. Ne? With the money that I'm going to be giving you, I wanted to come back and I wanted to get 25%. Right? You are like, okay, good, 25% works for me. Right? Now, the question is that, did you do your numbers? You didn't do your numbers. Now, when you're looking at 25%, that person wanting 25% back, you get your interest. Now only you find out that your return on investment was also 25%. Now, looking at it from total, right? We might say that yes, we might have made a profit, but now if I'm going to be giving now his money that he invested with and also giving him his 25%, you can only imagine how much profit will I be making. And now with the property, you need to understand that you are looking at going into a deal for around 6 to 8 months. So now, if I only made 10,000 within 6 to 8 months, my question is that, is it really worth it for me to go into that property? So now, choosing the wrong finances has to do, the financial model has to do a lot about the interest that you're going to be paying back to the person that's financing the property. Now, if that person is saying that, no, I want 25%, or that person says that on a monthly basis with rental, I'm going to be giving you 100,000, but now I want my money within 6 months. And you're going to be paying them from the rental income that you're getting from that property. And Kamona, you also took bond, the money that you got from the financing person, that was the money that you were going to use to renovate the property. Now, if you're looking at it from that perspective, on a monthly basis, the question is it realistic for you to be able to pay them within the next 6 months? And in most cases, it is not realistic. So now you choosing that financing model, saying that I want money from Neo and I'll also give him 25% on top of that, and I'm going to be paying you within the next 6 months, and I didn't make my calculations, or I didn't calculate how long is it going to be taking for me to actually pay Neo, it puts me at a back foot, because now I need to go out and go get financing from someone else. Now it's a hamster. Now I'm going from one person to another, busy borrowing money. So that's something that we really need to consider, that if I'm going to be financing, how do I structure everything in a way whereby even if I get into a situation where I have to pay this person back, they understand, number one, that we are going to be renting out this property. I can't give you your money right now. How long is it going to take? How long is it going to take for me to pay you back? Now, to be honest with you, right? Rental, if you're going into rental, it's going to be more of a long-term game with yourself and your partner. It can't be within 1 year. It can't be within 2 years. Sometimes it might even get up to 5 years, right? Now, if I'm saying that I'm going to go into a deal with someone for the next 5 years, the question is that, does that person have the patience to wait for me for 5 years? Me busy paying them Now, I know with some people, I mean, let's make an example that everybody can relate to, right? Imagine you borrow someone 1,000 rand, ne? And then after borrowing that person 1,000 rand, and then they say that I'll give you 50 rand on a monthly basis. We don't want that 50 rand, because you're like, but I'm not going to see my 1,000 rand. So now the question is that, how did you structure that financing model? And does it actually work for you and that strategy that you're using for that property?
Sure. So, Leverman, quite interesting with the last one, right? Because I also found myself in a situation whereby I was so attached to getting into the game, and I didn't really understand the game, that I got bent.
Okay.
So now my goal was to see myself investing in property. But in terms of the quality of the finance that I'm getting, I wasn't really interested.
Okay.
And I'm sure a lot of people are in this boat whereby the interest that they are being charged, they don't know. The what's that again? Their credit score. They don't know how that affects it, because a lot of us are rather looking at, because I've seen this question so many times, that what is the minimum that I should get to buy that property? So I know for sure that I'm not the only one who did this. A lot of us are rather looking at,
you're the only one.
No, I'm not, bro. I'm not. I've done a lot of Zooms. I know. I know. So a lot of people are looking at it rather from if I should put percentage wise, right? If we're looking at pass mark 100, and then you need 50. No, 100 is the maximum. So pass marking, let's say 50. A lot of us are looking at it from rather, if I can just get that 50%, I'm in. Now, I only realized after about my 3 years in the game, whereby I was being charged 22% on that loan that I took. But now the bank is not wrong.
It's not wrong.
Those terms and conditions were in place. I was so eager to an extent whereby, I don't know whether I was naive or in, as I did mention, that I was just holding on to this concept of, I want to get my feet in the game. But I didn't necessarily understand the quality of the financing model. So yes, I took a personal loan, but now when I'm looking at it, 22%. Looking at the interest that I got from that deal, it was a terrible loss.
And you know what, no?
It was a loss.
I totally agree with what you're saying, bro. I totally agree with what you're saying. And how the banks work, man, it's just crazy, bro. Because now, not the only time, but when you see how your interest actually is working against you or for you, is the more you take from the bank, the more interest you would actually be paying. Right? I'll give you an example. So say, for instance, if the bank is charging you 21%, right? And you took loan near 30,000. Ne? And they say that, no, we are going to be decreasing your interest. Ne? We're decreasing your interest from 21% and we're taking it to 15%, right? From a perspective, percentage, we are thinking that, I'm going to be saving, right? But on the other side, they're saying that, no, we are going to upgrade your card, right? So say, for instance, if you are at the gold and they're saying that now we're putting you on premium, but now your interest rate is moving from 21% to 15%.
Yeah.
But now we're going to be increasing how much you are paying on a monthly basis
Okay.
from your bank charges. But now, when you look at it when you're looking at it from a numbers perspective, like the actual numbers, you only see that no, that percentage decrease, it only decreased 180 rand on a monthly basis. But now, because of the bank charges, bank charges now shoot up.
So this was you.
This is me, bro.
You didn't tell me, bro.
Bro, I was sitting down and making calculations. I'm gonna call the bank. I'm gonna call that bank, bro. I'm gonna call that bank because that's what they did. So they're saying that no, we're decreasing your interest on a monthly basis.
Sure.
And I'm happy about that.
Yeah.
But now we're going to be increasing your bank charges. So
Of course.
looking at that, I'm like, when they pitched it to me, I was excited. I was like, let's go. Let's go. But now when I'm looking at the numbers, I'm really looking at the numbers saying that how much are these guys charging me on a monthly basis and how much is the interest or how much is the interest going to decrease by? Now, if you are a person that's saying that, no guys, my debt on a monthly basis, it's around, let's say, 150,000, right? And 150,000 is the amount that I've took. And now with the percentage decrease, it has actually decreased 1.5 on a monthly basis. Then I understand. But now if it only decreased 140, but now the bank charges 150, you're actually making more money for the bank.
Guys, the reason why I'm laughing so much is because Lewo's my brother, right?
I was so excited.
We're always together. So I was with him when he got that call and he didn't tell me the calculations that he made. He's only telling me right now. Right? But then again, as a big brother, I'm going to be honest with you again, bro. You know what you signed up for. And the type of content that I want us to push out is the content whereby we take responsibility.
Yes.
A lot of us like pointing fingers at the banks, right?
Yeah.
And now it's simple, guys. If you feel as if they're out there to cheat you, they're out there to scam you, then it's simple. Don't use them.
Yeah.
Use your own money. But as soon as now you start saying that you're understanding leveraging, what leveraging is, right? And you want to then start tapping into good debt, that's exactly what we are about. Because once we start now pointing fingers and trying to put banks in with a set or paint banks with a certain brush, we tend now to not really understand the benefits of how they work. Because literally, myself and Lewa are always saying, but how do these guys operate so that we can use their principles, certain principles, and grow our business? I'm telling you guys, once you really look at it from that way and you understand how they operate, you will then really push when it comes to ROI, because at the end of the day, that's what makes them operate, man. Because it's quite crazy when you're looking at their system levels that they're getting money from the Reserve Bank and then we are there. We can't get money from the Reserve Bank directly. So literally, they created an economy of their own. Yeah. So even with us, instead of acting as victims, we should be thinking that how can we create an economy of our own whereby we'll not only benefit but we'll also grow. Yeah. So that's the type of content that we're actually pushing as Knowing Wealth. And guys, I'd really like to thank you for sticking through. Yeah.
Before you close it there, right?
Yeah.
Before we go into the Q&A.
Yeah.
Man, looking at it, one thing that I am an advocate of, right, is whenever you are saying like the thing that happened to me, right, where the bank is decreasing my interest rate, but now it increased my monthly charges, right? One can look at it from that perspective and say that the bank robbed you, right? But now, if you look at the benefits that I'm going to be getting with this new card, it's now crazy. Because number one, I know exactly how to position myself because I have someone on the inside who can actually guarantee me or who can actually direct me in terms of what I can actually do. Now, number two is that whenever I'm going to be applying for my next property, the interest rate is going to be really low because of the type of membership that I've actually joined right now. So now, the benefits that come with it are on a different level.
Yeah.
And now, if you're looking at it only from the short term that, but I'm still paying the same price, and you're not looking at it from a long-term perspective that I'm actually creating a relationship. You when you go to the bank, they'll tell you that your relationship with the bank hasn't been long enough for us to be able to trust you that much. Yeah. But now, once you've had a good relationship with that particular bank, then things actually...
Sure.
Thank you for that. then things actually become easier for you from a property investing perspective.
That's right.
Now we are talking to property investors that are looking at buying properties via the bank.
Yeah.
We always want to make that good relationship or create that good relationship with the banks so that we are able to actually get financed. And the more we get financed, the better it becomes for us, because that means that we can buy more properties.